Hello everyone! I'm glad you're here because today we're diving into a topic that affects every single one of us, no matter how much or how little we have in the bank. Let's talk about your money and the danger you might not see. It's not a scammer or a hacker, but something much more subtle and persistent. You work hard, save, and trust your bank to keep your cash safe from theft. You might even feel a sense of security seeing your balance grow, thinking your money is protected. But there's a silent thief at work. One that sneaks in quietly and chips away at your savings. Inflation. Inflation means your dollars buy less every year, even if you never touch them. It's like a slow leak in your financial bucket. Remember when groceries cost less a decade ago? That's inflation eroding your money's value. It's not just groceries. Rent, gas, and even your morning coffee cost more now. If your savings just sit in a low-interest account, they're shrinking, not growing. The interest you earn often can't keep up with rising prices. Every day, your money loses a bit of its power to provide for your future. Over years, this can add up to a significant loss in what you can actually buy. This isn't about fear, it's about taking control. Knowledge is your best defense against this invisible enemy. You can't just save your way to wealth. You must invest. Investing is how you make your money grow faster than inflation eats it away. Investing is how you outpace inflation and protect your purchasing power. It's the key to building real wealth over time. It's about making your money work as hard as you do. You deserve to see your efforts rewarded, not eroded. Today we'll explore 6 smart places to put your money, better than letting it sit in cash. These options can help you build a stronger financial future. These aren't get-rich-quick schemes, but proven strategies for long-term growth. Real wealth takes patience and smart choices. We'll cover gold, real estate, stocks, bonds, and more. Each has its own strengths and risks, and I'll help you understand them. I'll break it down simply, so you feel confident and ready to act. No jargon, just clear steps you can take. You're stronger than you think, and you can take control of your financial life. Let's get started on this journey together. Inflation is real, but you have options. You don't have to let it win. The first step is understanding the rules of the money game. Once you know how it works, you can play to win. Don't let your hard work be quietly stolen. You deserve to keep what you've earned. Let's protect your future together, starting right now. Let's dig deeper into the problem with holding cash. While it might seem like a safe option, there are hidden costs that can erode your wealth over time. Standard savings accounts pay very little interest, often less than inflation. This means the purchasing power of your money decreases as prices rise. If inflation is 3% and your bank pays 1%, your money loses value every year. Essentially, you're losing money by keeping it in a low-interest account. Over decades, this loss is devastating. The longer you hold on to cash without investing, the more purchasing power you lose. $100,000 today won't buy nearly as much in 20 years if it just sits in a low-interest account. The cost of goods and services will continue to rise. Being too safe with cash is actually risky. It's a guaranteed loss over time. You might feel secure, but your money is quietly losing its value. Of course, you need an emergency fund. 8 to 12 months of living expenses in a safe, liquid account. This is essential for unexpected expenses. That's your safety net, not an investment. It's there to protect you in case of emergencies, not to grow your wealth. But any money beyond your emergency fund needs a job to grow and beat inflation. This is where investing comes into play. Hoarding cash is denying financial reality. It's important to understand that money needs to be actively managed to maintain its value. So, where should you put your extra savings? The answer lies in diversifying your investments. You must invest in assets, things that hold or increase value over time. This includes stocks, real estate, and other investment vehicles. Assets are the building blocks of wealth. They provide the foundation for financial growth and security. In the next sections, we'll introduce you to proven asset types that can help your money grow. Understanding these options is key to making informed decisions. It's time to move from just saving to smart investing. This shift is crucial for long-term financial health. Don't let your wealth quietly slip away. Take action to ensure your money grows. Let's make your money work for you. Together, we can build a secure financial future. Let's start with one of the oldest stores of value precious metals, gold and silver. Gold's rarity and universal value have made it a safe haven for centuries, especially during economic turmoil. It acts as financial insurance, often rising when other investments fall. Over decades, gold has outpaced inflation, preserving purchasing power. Silver, too, is valuable, both as a store of wealth and for its industrial uses. You don't need to buy gold bars. You can invest through precious metals ETFs, which are easy to buy and sell. These are long-term, stable additions to a diversified portfolio. Consider allocating 5–10% of your investments to precious metals for added security. They're not about quick gains, but about stability and protection. If you want an asset not tied to any government, precious metals are a smart move. They've stood the test of time. Add them as a layer of security. Now let's talk about industrial materials, like copper, nickel, and cobalt. These raw materials are essential for everything from homes to high-tech devices. The global shift to green energy and electric vehicles is driving up demand for these metals. Investing in them means betting on the future of technology and infrastructure. You don't need to store copper bars. Invest in mining company stocks or ETFs focused on industrial materials. This spreads your risk and gives you exposure to growth in this sector. It's a forward-looking strategy. Higher risk, but higher potential reward. If you believe in long-term global growth, consider adding industrial commodities to your portfolio. They're the building blocks of tomorrow's economy. This is about investing in what makes the world run. Industrial materials can be a powerful addition for growth-minded investors. There's wisdom in the saying, buy land, they're not making it anymore. Land and real estate are finite resources, making them powerful assets. Real estate has a long track record of rising in value and beating inflation. Owning property can also provide steady rental income. You don't need to buy a whole building. Real estate investment trusts, REITs, let you invest in real estate with small amounts. REITs own and manage income-producing properties, and you can buy shares like any stock. This gives you diversification and professional management. Real estate grounds your portfolio in something tangible, offering both growth and income. Whether you buy a duplex or invest in a REIT, real estate is a key part of a balanced plan. It's about building wealth you can see and touch. Real estate is an essential pillar of financial security. Don't overlook its power. Let's shift to government bonds, safe, reliable, and steady. Buying a government bond means lending money to the government in exchange for regular interest payments. U.S. Treasury bonds are considered among the safest investments in the world. They provide predictable income and protect your capital. When markets are volatile, investors flock to government bonds for stability, but stick to bonds from stable countries with strong economies. For Americans, buying U.S. Treasuries is easy and fee-free through Treasury Direct. Bonds are ideal for conservative investors or those nearing retirement. Returns are lower than stocks, but the peace of mind is unmatched. Government bonds are the bedrock of a conservative portfolio. They anchor your finances in uncertain times. Now let's talk stocks, the engine of long-term wealth. Owning stocks means owning a piece of successful companies and sharing in their growth. Over time, stocks have outperformed every other asset class. Focus on value stocks, established companies with steady profits and dividends. Dividend-paying stocks provide income and growth. Mutual funds or ETFs like the Vanguard High Dividend Yield Index Fund offer easy diversification. This approach is for long-term investors, those saving for retirement or big goals. Consistency is key. Invest regularly and reinvest dividends. This disciplined strategy, called dollar-cost averaging, builds wealth over time. Stocks let you participate in the economy's growth, one share at a time. Don't be intimidated, start small and stay steady. Stocks are your ticket to long-term prosperity. Let's look at two more options: world currencies and collectibles. Strong foreign currencies like the Swiss franc can diversify and protect your wealth. Currency ETFs make it easy to invest without complex accounts. Collectibles, art, vintage cars, rare books, gain value from scarcity and demand. You don't need millions. Online platforms let you buy fractional shares of high-value items. Collectibles are for enthusiasts and long-term holders, not for quick profits. They add a unique, speculative edge to your portfolio. Only invest a small portion here and do your research. These assets are about passion and rarity, not income. Diversifying with currencies and collectibles can add resilience to your plan. Explore them carefully as part of a broader strategy. We've covered a lot, from gold to real estate, stocks to collectibles. Each of these assets has its own unique benefits and risks, and understanding them is crucial for making informed decisions. The key lesson: you have options to fight inflation and grow your wealth. By diversifying your investments, you can protect yourself from market volatility and ensure a more stable financial future. The smartest move is diversification, mixing several asset types to reduce risk. This strategy helps you balance potential returns with the level of risk you're comfortable taking. There's no one-size-fits-all answer. Your plan depends on your age, goals, and risk tolerance. Tailor your investment strategy to fit your personal circumstances and future aspirations. Young investors can take more risk for growth. They have the advantage of time to recover from market downturns and benefit from compound interest. Those nearing retirement should focus on safety and income. Preserving capital and generating steady income becomes more important as you approach your retirement years. Be honest about your goals and comfort with risk. Understanding your financial objectives and risk tolerance will guide you in making the best investment choices. The most important step is action. Don't let fear or indecision hold you back from starting your investment journey. Start small. Open a brokerage account even if it's just with a small amount of money. Buy a share of a REIT or a dividend fund, which can provide regular income and potential for growth, or purchase a government bond, a safer investment that can offer steady returns. Build the habit of investing. No one else will do it for you. Consistency is key to growing your wealth over time. Take control, create a plan, and start building the secure future you deserve. Your financial well-being is in your hands. Don't let inflation steal your hard work. Stay proactive and keep your investments aligned with your goals. You can do this, one smart step at a time. Every small action you take today can lead to significant financial growth in the future. Your financial future is in your hands. Make informed decisions and stay committed to your plan. Start today and watch your wealth grow. The sooner you begin, the more time your investments have to flourish. You're ready. Let's make it happen. Take the first step towards a brighter financial future now.